Yeah. So good afternoon and namaskar. A warm, very warm welcome to all of you for today's very important discussion on what on earth is the rupee going? Where is it going? So, a lot of us have a very keen interest to follow as to what's happening, and we have experts with us to answer your questions. As you know that the positives and negatives in global trends which are there, but given the uncertainty surrounding us today with respect to the future of money, we are happy to announce that today Mr. Jamal Mecklai, CEO Mecklai Financial Services, is among us to share his thoughts on this most relevant and important issue at the first lecture series of financial year 22-23. Mr. Mecklai needs no introduction. To trust, we have all received brief CVs of our esteemed speakers already. Still a few words. Excuse me. Mr. Mecklai, CEO of Mecklai Financial Services, 86 to present, is a first-ranked individual in All India exam 1967 and a graduate from Indian Institute of Technology in Chemical Engineering in 1972. He has done doctoral research in biomedical engineering from Rice University, Houston, Texas. He was appointed to the R.V. Gupta Committee of the RBI to assess whether and how Indian companies should access international markets to hedge commodity price risk. He has been consultant to the World Gold Council to assist in drafting an approach to the Indian government on gold policy. Also, he acted as consultant to the Forwards Markets Commission under a World Bank grant for regulating brokerages on commodity exchanges in India. Thank you, Mr. Mecklai, for being with us today, and a very warm welcome to you. The other speakers, Mr. Nishant Shah, who's the founder and managing director of the Management Consulting and Transformation Services firm Jackstien Practices and Consulting International, FCA Futuristic, and the winner of Indian Achievers Award 2022. He was the head of operating risk for JP Morgan India, ex-Citibank, ex-Standard Chartered. He is considered one of the foremost experts in the complex global foreign exchange and interest rate derivatives space, and has led the development of several critical industry initiatives. He has played a pivotal role across industry members, regulators, industry bodies, and self-regulatory organizations. So, Mr. Shah, welcome to Bombay Chamber, and I'm sure people are anxiously waiting for inputs from you. And our own Ashith Kampani, chairman of our PEVC committee, Bombay Chamber of Commerce and Industry. Mr. Kampani has been associated with the chamber for a long time and is also on the board of Bombay Chamber. His inputs are very important for us to move forward. His journey began with family stockholding firm on Dalal Street, open outcry systems to all digital online trading systems. During this journey, he spent time with retail, wealth management, institutional equities, private equities, investment banking, merger and acquisition, and now in venture capital and early stage investment and advisory. He was MD at JM Financial, currently chairman at Cosmic Mandala 15 Group. With those words, may I request Mr. Ashith Kampani, chair of our PEVC committee and chairman Cosmic Mandala 15 Group, to formally start today's discussion on where on earth is the rupee going. Over to you, Ashith.
Thank you. I really appreciate. And the title is absolutely gripping. Where on earth the rupee is going? And there are many currencies, but yes, rupees getting the prominence here. Allow me to welcome Mr. Jamal Mecklai and Mr. Nishant Shah today, along with the esteemed board members of the Bombay Chamber. Dear participants, ladies and gentlemen, welcome today. The lecture today is Where on Earth the Rupee is Going. At the outset, on the behalf of the Chamber and my own behalf, I would like to express my sincere thanks to Jamal Mecklai and Nishant Shah for very kindly accepting the invitation for addressing our members on the subject in both topical is and in the importance at this point of time. We all know Mr. Mecklai and Mr. Shah does not need any introduction, and they are uniquely qualified to deal with today's subject. Today, I have a proud privilege to mention that Bombay Chambers, established in 1836, has a very long, illustrious history of continuous service to trade and industry. The chamber represents a wide spectrum of highly reputed, professionally run companies, which are based in city of Mumbai, but whose manufacturing facilities and commercial influence spread throughout Maharashtra as well as in India and internationally. The chamber acts as a bridge between civil society, government, and the member organization and aim to promote the interest of all the stakeholders in overall interest of the company. In the past, the role of the chamber in the development of the city and the region was particularly significant. It was infrastructure, bringing out the first railway. It was instrumental in bringing out about the first railway built in India, Bombay Thane Railway, completed in 1853. And Chamber's relentless advocacy and efficient nationwide postal system and standardization of postal rates led to the passing of the Indian Postage Act 1854. I'm also happy to highlight that over past few years, Chamber has embraced a larger role of corporate for change, in addition to our traditional role of advocacy with government and facilitating trade and industry. We therefore are striving to promote good governance and ethic conduct in the business and public life towards the greater good of society, in addition to ensuring equitable and balanced industrial growth for the country in a sustainable manner. Now, just touching upon today's subject before Mr. Jamal, Mecklai, and Nishant Shah takes on. We have been seeing that Indian rupee since 1991 has been under a rough ride. Since the 1991 reforms, 31.37 today is somewhere around 79.80 versus 1 USD. And for decade on decade, we have been seeing depreciation of rupee for the various reasons. In last 30 months, we have two big challenges along with us. One was the COVID, which was year 2021, 21, 22. And fag end of the year 21, 22, we started seeing the Ukraine-Russia, which converted into full-fledged war. That has pushed almost everything into a very different zone. The interest rates have risen, commodity prices have gone through the roof, the inflation has gone through the roof, and major world currencies depreciated, making dollar as one of the strongest currency. So with that, I'm going to request Mr. Jamal Mecklai and Nishant Shah to add their thoughts to take on from here. Over to you, Mr. Jamal Mecklai.
Thank you, Ashith. Pleasure to be here. It's a crazy time. Like I mentioned earlier, I've been in markets a long time. And boy, it's hard to remember when it was this wild. But I mean, let's try to keep a focus. Like I said, where on earth is the rupee going? I think first thing you have to understand is what is it that drives the rupee, right? Generally, the rupee is driven by the mood and state of the global market. Domestic fundamentals are important, but they only become controlling when they are very bad. Otherwise, the rupee, like most other currencies, depends on what's happening globally. We have become more globalized in that sense. Right now, the global markets are unbelievably volatile. And so to try to figure out where the rupee is going, we need to really step back and see what's happening in the global markets and how is that likely to pan out, right? Now, to my mind, the singular force driving global markets and hence the rupee today is the extremely delayed reaction of, I will say, successive Feds to inflation. See, it seems that the US Fed, and I don't mean this current Fed, I mean the last 3 or 4 or 5 Feds, have forgotten the fundamentals of monetary policy, what I would call monetary policy 101, which is what in the old days I used to say, you take the punch bowl away just as the party is getting started, right? In other words, you're supposed to be a spoil sport, right? Now, why is this? And why is this important? See, if interest rates stay low longer than they should, to support growth, all kinds and different kinds of excesses build up in the system, right? In particular, equity markets go crazy. They accelerate beyond reason, sometimes for years, right? And the ill effects of that, I mean, ultimately, anything that's sort of running out of control will have ill effects. I mean, you see it in your personal life, you see it everywhere, right? Now, the ill effects, though, again, as in your personal life, sometimes are not seen for years, because there are forces that people use as an excuse. China has come into the global economy, so prices are going to stay low. Technology is improving productivity, so prices are going to stay low. Globalization. Now, all these are facts. However, none of them is structural. They are all cyclical. As we see, China is now, prices are going up in China. See, what it is that most people in financial markets make money when the markets go up. So they are constantly tempted to believe what they want to believe, which is that, no, inflation is not a problem. You can keep interest rates low. Now, the Fed, which is the regulator, I mean, their job is to look beyond this. But I'll give you 2 or 3 examples that as to how they have failed over the last decades, right? So what happens when the excesses build up, right? And ultimately what happens is markets have gone very, very high. They collapse. Inflation is released, they collapse. And usually it takes a very long time for markets to recover their levels. If you remember, back in the dot-com days, right? In 1996, Alan Greenspan, who was the chairman of the Fed, made a comment which people have talked about a lot. So the markets are showing irrational exuberance. This was 1996, mind you, okay? Inflation was there, but it was inside the Fed's range. So he didn't do anything, and they continued to not do anything, They started raising rates in 1999. Inflation peaked at that time, and think of the number, at 3.7%. And boom, the equity markets crashed. They lost like 40% of their value, which is terrible. But what is worse, it took more than 3 years to recover that 2000 car peak, right? The second crisis, second major, as far as this is concerned, was the mortgage derivative crisis in 2007, 8, 9, where bankers had come up with all sorts of sexy products. That's another issue, which is that bankers, because they can spend more money, are able to get much smarter people than the regulators. Though the many regulators are smart, and come up with all sort of, the regulators certainly at that time were behind the market. And the housing market in the US went completely nuts, right? Let me look at some numbers here. Actually, to be fair, the Fed, which was the Bernanke at the time, did see this coming. So they started raising rates, but both thoda, very low, And by the time inflation broke out, I mean, they had got interest rates up to 5%, and inflation was at 4.7%. I mean, just look at these numbers, 4.1%, at which point that bubble crashed. That was terrible. Hundreds of thousands of people lost their home and their savings. Markets crashed, losing 55%, right? And again, more frightening, it took 4 years or more for the market to recover its heights. So now those are pretty terrible stories, So what's happening now? Is it that bad? Well, the current market decline started at the end of 21, before the Russian invasion, right? Markets for some months had been getting concerned that, because there was zero interest rates after COVID for so long, there was too much money in the system, inflation must come up. Now the Fed, no, it's transitory. They just didn't want to take that punch bowl away. They finally started raising rates in March. From 0.25, it went up, but it was way too late. I mean, they've had 275 basis points hikes, and the rate is 2.5% now. Inflation is 9.1. I mean, they haven't seen these numbers since the 70s. And there's a Fed meeting today, they will likely raise rates again by 0.75%. But market doesn't know what to do. I mean, is this inflation going to come down? Is the economy, US economy, global economy, going to tip into recession? On the other hand, US employment statistics came out last week, out of control. So nobody really knows what's going to happen. People are very nervous. You know, markets they fell sharply. And interestingly, today they are about 10% down from their peak. You know, so it's nowhere near a major collapse. They fell to about 18, 19%, and they've recovered some part of it. You know, so the market, pata nahi where it's going to go. But one of the clear impacts of all of this, rising interest rates, US interest rates, expectation of further rises in the US interest rate, has actually created a huge amount of dollar strength. Since the start of the year, the dollar is the DXY, which is the composite, has risen by nearly 15%. Every currency has crashed, except, interestingly, the Russian ruble, right? Rupee has fallen, but the yen and the euro have fallen even much, much more. And the euro came very, very close to parity. I mean, the rupee's fallen about 8%, nearly came to 80. RBI, of course, was there riding the horse. Now, they always say, and they've been saying this for decades, that we don't target any level. We are only trying to manage volatility. It's just a coincidence that they became really, really enthused when it was right at 80. So I think, you know, because everyone, actually 80 is not materially different than 79.50 or 80.50. But, you know, the media, everybody looks at round numbers. So, of course, RBI has been trying desperately to protect that level. And to its credit, thus far, it's been successful. It had to sell about $40 billion of reserves, but then that's what the reserves are for. The governor said, why have we accumulated reserves? To use them if there is a difficult situation. Now, in all of this, there is what might be good news, that the dollar equity markets have corrected a little bit, right? Now, one of the things I've learned from years and years ago of being in the market is that nothing goes in one direction forever, right? It looks like it's going to cut when you're on a bull run, there's no end in sight. When you're in a bear run, the world is ending. But things always turn. But I mean, it is madness to try to figure out when it's going to turn, you know. So as of right now, what has happened? There has been a correction, right? Significantly, the price of oil, which had surged to $130, right, after the Russian invasion, and was a major issue also in terms of inflation, pushing inflation even more than the monetary amounts. That has also corrected. It corrected, it sat above 100, now it's fallen below 100, right? So the real question for the rupee, for everything, is this what's called a bear market rally? Or is it real, right? Because, you know, again, nothing goes in one direction forever. So the market can fall, come up. And this is another thing about bear market rallies. You really begin to believe, we're out of the woods. And you take a second hit. In that 2007, 2008 crisis, and very interestingly, the chart of the Dow today is almost identical with the chart of the Dow at that time. After falling 20%, going up to 10, it ended up falling 50%. Now, I personally don't think it's going there, but we need to understand that it ain't over till it's over. You don't know when it's over, right? Now, of course, the other big force, the elephant in the room, as they say, is the Russian invasion, right? I mean, this has not only created just horror, you know, untold destruction, hardship, sadness. It's also pushed oil and commodities higher, right? Which has exaggerated the inflationary trends, you know. But this is not it's a huge event. It's a global war, right? But it's created very interesting angles, you know. Many people in what you would call the global south, you know, not the Europe, Japan, US, are while of course they're horrified at what Russia is doing, most everybody is. But you know, you think about it, bhai, Afghanistan mein kya hua? Iraq mein kya hua? Syria mein kya hua? So, you know, you begin to think, hey, this is bad, but that was no better, right? And then again, for ultimately everybody's got to look at their own. For us in India, I mean, Russia has been a friend for a long time. We've had you know, military equipment, military parts, etc. So how do we play this, right? Now in Europe, though, the situation is very bad, right? Because Russia is oil and gas, particularly gas to Russia. I mean, the Europeans are really being squeezed. It's interesting when this thing first started, you know, and now we're talking about, I think it was February, March, April, May, June, July. It's been more than 6 months, right? In the early days, it really looked like the Europeans would like get tighter and closer together. In fact, I even wrote a column said, is Russia helping the Euro stay together, right? But you know, life is life. And if you're under pressure and the pressure continues and the pressure continues and the pressure continues, you know, you start looking at other things, like already what's happening in Europe, right? A lot of leaders are saying, Baba, let's find some way to resolve it. The Italian government even collapsed, right? Because some of the other parties in Italy who were pro-Russia didn't like Draghi, who was a great guy. They didn't like his being very loud in favor of Ukraine. So while they still don't talk that the euro may fall apart, right, like there was after the European debt crisis, but the longer it goes, there's really no telling. There's really no telling what will happen. I wouldn't bet on that right now, you know. And the real point is this is not going to let up. I mean, Putin is not going to stop. I mean, you know, he's able to sell his oil lots of places. Oil prices are high. You know, whenever you see a trauma, when this whole thing started, I said, boy, one thing that could stop the war is if oil magically fell to $20. Well, guess what? It's fallen, but it's still $95, which is plenty of money for him. So he's just continuing and continuing and continuing, you know. And people are sort of scared to take him on head on. But, you know, to my mind, I think what we're going to see is, you know, as much as, let's say, no gas, what's worse is uncertainty. So my sense is he'll say, okay, I'll give you 20%. He'll say, no, I'll give you 30%. You know, he keep you off balance because you can't plan them. Well, the other big beast in the world today is, of course, China. Now, you would think that this is made to order for China. The whole world is in disarray. They can come in and take advantage. But see, they've got problems also, you know, because of their zero COVID policy, growth has not recovered very well. And I mean, whatever else, they also grew very fast to where there are lots of problems in the real estate and the banking sector, which are coming home to roost. You know, so, you know, it's hard to say what's happening there at the best of times, but growth does not seem to be good there. Also, with this year, there is this People's Congress where Xi wants to crown himself as the man, right? And, you know, so there's talk also that China is weak, but they're acting strong, right? So, and this whole thing with Taiwan, for example, a lot of people point to that as what sort of madness is this? You know, are you really going to attack? Well, the truth is you don't know, right? So what I've painted is a picture fundamentally of you don't know. I mean, at the best of times, I always say in markets you don't know, but now you really don't know. You don't have a clue, you know. In fact, let me briefly digress before I come to the rupee about, you know, uncertainty in markets. You know, in the 80s, when I first started this business, in 1987, right, there was the Wall Street crash. And I was new in the business, but I was already had built a little bit of cachet. And people were calling and I don't know. When markets are so crazy, nobody knows, but they were insisting. So I didn't know what to do. So I went down to smoke a cigarette. I used to smoke in those days. And there was a chanawala nearby who I knew. And he came up to me and said, Saab, jara 50 rupiya do. I said, bhai, bhago ya, main soch raha hu. When I was smoking, then I called him. I said, acha, 50 rupiya chahiye. Bolo, dollar upar jana wala hai, niche jana wala. He said, mujhe kya pata? I said, bolo. He told me something. I went up and told customers that. Because when people are insisting and the market is so insane, there is no way of telling, which is why, frankly, I'm not in the business of markets. I'm in the business of risk management. You can't forecast the rupee. No one can forecast it, right? But you need to protect yourself. So, okay, given all of this that I don't know, what are we going to do? What is going to happen to the rupee? Right? Now, clearly, as I said at the very start, it is hostage to the global mood, right? And it's very, very difficult to see when that is going to turn, right? Global growth is weakening. Domestic inflation is high. Current account is like out of control. It would be reasonable to assume that the rupee will remain under pressure, right? But the fact is it came to 80, it came back to 78, 80, it's now at 79.50 or something like that. So there are a few forces which are, what I would call straws in the wind, right? The first is RBI. I mean, it's very clear. If you heard the comments after the monetary policy, they're saying we're not going to let it fall. I mean, they're claiming they're just trying to prevent volatility, but they've got reserves and they are going to use them, right? They raised the repo rate by 50 basis points. And to me, what was remarkable about the press conference after the last monetary policy is how calm they were. I suppose that they have to do that, but having just faced this record trade deficit, it didn't seem to bother them. Well, there's another force, which is kind of nice, which is in July and even into August, portfolio flows have come back. I mean, why was the rupee falling? Because people were leaving, right? And why were they leaving? Because the world was falling apart. Well, now people have started coming back quite well. In fact, August, I think it's the first 10 days, it's been $2 billion. So, uska kya matlab hai? Again, I'll just say what I said before. Is this, again, just a bear market rally, or is it a real thing? I would say, frankly, if people are putting money into India, what it says is India is an attractive destination, right? And people also feel that they can exit very easily if they need to. So it may still be a bear market rally. So it may go up and crash again. So don't hold your breath, right? But to my mind, there is one more thing which could be hugely significant. And, I touched on it a minute ago, that RBI was so calm about this whole, what looked like trauma from my side, right? And one of the things, maybe they have something up their sleeve. Earlier, prior to the monetary policy, while the rupee was in great trouble, they allowed companies to sell or buy in rupees, right? Who wants to buy in rupees or sell, who will buy from you in rupees? Well, what's interesting, they put a few guidelines down. If you have a vendor who's willing to sell you in rupees, his bank has to open a Vostro bank, has to take permission from RBI to open a Vostro account with the local bank and take permission from RBI. Now, at the MPC meeting, people asked one of the deputy governors, has there been any requests? And they said yes. They didn't say any more. There have been some requests. Now, I'm just thinking, normally we bought, I think, 2 to 3% of our annual oil requirements from Russia. In June and July, we bought 25% of our requirements from Russia, right? Now, suppose this process goes through, right? And Russia is willing to, see, Russia has been selling us at a discount. But if we say, Baba, pay me in rupees, I don't want a discount, they might be happy to sell us in rupees. Of course, they'll have to sit on those rupees. They can't do much with it. But if something like this happens, this could be an extraordinary game changer. There would be, because like I said, we're buying 25% of our requirement. Now there would be $25 billion a year, which would change the whole current account deficit. It wouldn't turn it positive, but would make it hugely more easy to manage. And as I mentioned, the deputy governor, I think Michael Patra, said 2-3 times, we can manage this current account deficit. Maybe this is what they have up their sleeve. So I really don't know, as always, but this is sort of the picture as I see it. These are the forces driving it, right? And we've just got to hold on. You know, if you're a punter, that's another story. But if you have a business with FX risk, you need to have a process, and you need to grit your teeth and just follow the process. There are times when you'll hurt, but over time you will do well, you know. And that's, when I say do well, you have to also set reasonable goals in any market. So that's it. Where in the world is the rupee going? I don't know. Thank you.
Mr. Mecklai, thank you. That was, as always, engaging. In fact, the other day I was discussing with Mr. Mecklai what a talk I had attended maybe 10, 12 years back, where he faced the usual, the specific questions, where's the rupee going? And I remember him saying that if you want a great certainty about where the range of the rupee will be, I can tell you it will be between 10 and 100 rupees. But that's about the max we can tell you. And I think that's the exact, and that also was a probability percentage that he gave. And I think that's the exact right way to sort of approach this. Mr. Mecklai, thank you so much for lending your experience. Listening to you has always been such a sort of welcome experience for me personally. And you put it so well when you said it's about structure and discipline in the long term. As we discuss where on earth the rupee is headed, let's begin by summarizing a bit about where we are. Mr. Mecklai put it very, very well. I'm just going to focus a little bit more on the rupee side as well, so that we have a relative basis for comparison. The rupee breached the psychologically important 80 level somewhere around the 3rd week of July. I always underscore the term psychologically important, because prior to my 30th birthday, on the night before that, I felt no difference on the night day after. These are psychological landmarks, so I make sure that I underscore these landmarks with the term psychological. The primary factors assigned to the depreciation of the rupee are high inflation in India, rising interest rates in the US, and the increasing current account deficit. Along with this, FPIs have been pulling out of the equity markets with an outflow of 30 billion this year, which has increased selling pressure on the rupee. India's FX reserves were around 640 billion USD, but now are at that 20-month low of around 550, 570 billion. That being said, after breaching 80, the rupee has since been tracking back, with RBI selling dollars to stem the fall. As Mr. Mecklai said, RBI's mandate is to manage volatility in the USD INR rate, not the rate itself. So let's also take a look at the global and geopolitical factors that have directly or indirectly impacted the volatility of the USD INR, and because that sort of demonstrates our ability and framework for management as well. Brexit and the EU, the US-Russia tensions, Iranian tensions and unrest in the Middle East, geopolitics of the Afghanistan pullout, South American political crises that have impacted oil and commodities, key figure assassinations, climate change, the replacement of religious differences with political differences, conspiracy theories, the post-truth era and widening generational differences, the India-China border tensions, catastrophes and weather events, the Ukrainian war, the Sri Lankan economy, trade wars, spiraling commodity prices, the US-China tensions, and obviously COVID-19, and on the back of it, almost unbelievably, the monkeypox pandemic. So management of the volatility of the rupee must be viewed in the context of this geopolitical and global environment. I've had the pleasure of extensively working with RBI on many policy measures over the years, and I've seen firsthand the number of considerations that go into any change. Perhaps that is to no small extent the reason for the calm demeanor that RBI demonstrates in some of these meetings. As a country, we have sort of matured greatly in such management. It is hard to believe that FERA was replaced by FEMA just a couple of decades ago. A sign of growing maturity is when regulation looks not just at the technical aspects, but the behavioral and market conduct aspects as well. Since this also affects volatility a lot. I had the honor of being part of the first India FX committee formed by RBI as part of the Global FX Code. The development in the markets driven by the presence of mature regulation in the OTC side, as well as growth in the exchange traded currency derivative side, is a strong indicator of how well we are geared as a country on the management side. So the infrastructure to manage the up and down movements in the rupee is well geared. But what about the current level of the USD INR itself? So for this, relativity is key. A score of 60 in an IPL match may be considered a pretty bad tally, but not if the opposing team is all out at 57. Annual returns of 6% in the equity market may be considered pretty bad, but not if the index has fallen 15% in the same period. So for a complete picture, we need to look at several other factors for comparison. The REER, or the real effective exchange rate, is a 36-country measure. The REER indicates external competitiveness. And for India, it shows that even at the current levels, the rupee is stronger than it was in April 2020. As Mr. Mecklai pointed out, many emerging market currencies are in line with the INR depreciation of 7% since January. The Philippine peso, the Thai baht, the Korean won have depreciated more than the rupee. Moreover, reserve currencies like euro, yen, and the pound have all seen double-digit depreciation as against the rupee's 7%. So despite what the current sentiment seems to reflect, the rupee is not some sort of outlier, more so given the high that the dollar index is on. Furthermore, while wholesale inflation has been in double digits since April 2021, it is worth mentioning that the retail inflation, for the first time in 30 years, is lower in India than in the US. So it does not appear that a recession is looming. And while the growth story in India is not really fully back yet, many data points show momentum. Between the calibrated advancement, our reserves, our relative geopolitical position, our inherent strengths as a country, our place in the world, our national will, and our regulatory strength, I'm personally quite upbeat about the future. Of course, the road is long and full of twists, turns, and the occasional stumble, but these are nothing that preparation and agility won't let you beat. This is, in fact, our focus here at Jackstien Practices. To those who may not know us at Jackstien Practices, we are a cross-disciplinary group of cost and risk management consultants that help you and other businesses improve cost structures, create risk management structures, and enhance resilience, agility, and the bottom line. This is essential since the pace of change is now ever increasing. On a side note, even nature seems to agree. COVID-19 and monkeypox have come on the back of SARS, MERS, Ebola, and the Zika pandemics, all within the last 20 years, something that nobody could have imagined at the turn of the century. So in these times where turbulence seems to be cemented as a norm, what are the variables that will dictate where the rupee will go from here? Mr. Mecklai, as you so rightly said, actual rate doesn't matter as much as the variables that will affect the rate, because beyond the point you can't predict the variables and the rate. And even at some point we need to look at the few current variables that will dictate the future rate, again when compared with the fundamentals that belong to India, because India remains in a particular situation while the world can keep changing. So let's take a look at a few of the current variables that will dictate where the rupee will go from here, barring external geopolitical circumstances. Earlier, there was a question as to why the correction of 9 to 10% in the equity market was still not considered attractive to foreign buyers. But the recent inflows, as Mr. Jamal mentioned, seem to have partly settled that question. Commodity prices are cooling off, so the current account deficit may improve for India. The increase in overseas borrowing limits and the liberalized norms for foreign investments in GSECs will have an impact. Importantly, cross-border trade transactions, the rupee have also now been permitted, though it is too soon to guess at the impact. Mr. Mecklai rightly said that it could be a game changer or it could be a damn squib. We don't really know. It's too soon to tell. So what next? Will a repetition of earlier measures help? Like, say, raising NRI deposits the way we did in 2013 and combining it with incentives and significant rate hikes? Will raising rates to maintain the gap of interest rate differential with the US help? Will India's inclusion in the global bond indices help? And when and in what time horizon will the India growth story research back to its old days? Many of these measures will dictate where the rupee is headed. The future direction of each is uncertain. However, these are simply data points, and that is why I prefer to focus on the fundamentals. And the fundamentals tell me that if we make the right investments in managing the change and the risks, we will be able to leverage our macro and geopolitical position and our inherent strengths to come out better than most on the other side. Because in the end, it's all relative, and relative to anything else, we are ideally placed. So that's my time, ladies and gentlemen. This has been a great experience for me, and I'd like to thank Mr. Mecklai for gracing us and Mr. Kampani for starting us off on this conversation. With that, I'd like to hand the stage back over to BCCI with my thanks for this fantastic event.
Thanks. Thank you both to you, Nishant, as well as to Mr. Mecklai. So if anyone has any questions, I would request you all to post them in the Q&A box so that we can take them on your behalf with either of them. So till we have some questions, how does one navigate right now with, like both of you all mentioned, what is happening with various currencies, and some of the currencies which are more European or the pound is easier to manage right now than dollar. But most of us, deal extensively with dollars, especially to people who are trading. That becomes a major hindrance at the moment with, at least a 6 rupee gap from the past 3 or 4 months. Is there any mechanism to work around this?
Sandeep, let me come in. I want to actually bring up a point which I did not bring up, but I think is very important, and it doesn't directly address your question. One of the points is you started out saying since 1991, we've just been falling and falling and falling and falling and falling. Now, in general, one of the reasons the currency keeps falling is because inflation is higher than in the other countries. Now, today, it's a very interesting situation where inflation in India is lower than it is in the UK, in the US, etc., etc. Now, we don't know that they will remain at 8-9%. But if we can ensure that we stay at 5-6%, then that continuous downward slide, I'm talking now over time, may be averted. And I feel this particular governor, this RBI, is doing a great job. And they are really focused on that, So I feel that is something to give us a little hope. That, it's not going to be, another 30 rupees over the next 30 years. I don't think.
Right. Thank you. Thank you, Mr. Mecklai. There's a question from Milind which says BRICS are developing a new basket-based reserve currency. How will it affect on Indian rupee? Nishant, you want to take it up?
Sure. So I think there have been, so there is this currency of exchange. There's a reserve currency. There are many different concepts. For example, being the primary reserve currency and the currency of exchange are seen as very different things. BRICS may very well sort of look at the new basket, but I think generally for all of us, the strength comes from the acceptability of that basket, either as an index or as a means of exchange between different countries who are not part of the BRICS countries. Now, in the BRICS countries, one may say, for example, that this basket may be used as an index for measuring the payments interstate between BRICS countries. Even in that limited scenario, we may, for example, find it hard to say that I'm okay with Chinese yuan. receiving payments, and vice versa. There may be other issues like that. And then once you move outside of BRICS, letting other people, the acceptability of that index with other people, or using a basket of currencies, whichever way it comes out, because at some point the people are referring to a centralized clearing house, the other, like we have as the Asian Clearing Union. In the other hand, there's a basket that we are referring to. Depending on how it plays out, I think the key is in the acceptability in the long run, and whether people accept this basket of currencies over the longer term, like EU break the collation and the aggregation of groups of nations keeps changing, being made up, broken, etc., etc. BRICS beyond a point was a thought that occurred in somebody's mind at some point in time and snowballed into a real thing. But the long-term acceptability of an index like this, or of an acceptable basket of currencies like this, which is driven by BRICS, that remains to be tested. Though past experience would tell us that it has a fairly uphill struggle to gain acceptance.
Right. Thanks, Nishant. There's another question from Ketan, which says, going forward, do we see a realistic chance of shift of oil trade from USD to other currencies, like Russian oil for us gets transacted in Indian rupee? This will certainly help in further boosting our foreign exchange reserves, as oil is one of the main commodities for USD. Mr. Mecklai, would you want to take it up?
Well, there's been for a long time, there have been efforts. I mean, there's the story about why the US invaded Iraq is because Saddam was selling oil in euros.
Correct.
And there's a lot of people who believe that actually the US, its greatest strength is the fact that the dollar is the currency of choice in the world and connected with oil. Frankly, it's impossible because obviously the US will do anything to prevent that happening. But it does look, like I said, and maybe this Russian invasion is the starting point, that there is going to be a lot of turmoil, sort of groups coming together, breaking, etc., etc., etc. But that's the problem. I can't see the Chinese accepting the ruble, right? And I can't see anybody ultimately accepting the yuan. So in that sense, I feel that while you will see some of this action, no question about it, but it's going to be really hard. It's very hard to dislodge the dollar. For decades, people have been talking about the demise of the dollar. Nahi hota hai.
I think till such time as the relevance of petroleum and the relevance of the dollar, and thereafter the marriage into the petrodollar remains, I think I am completely on board with what Mr. Mecklai says. It's a hard marriage to get on.
Right. We'll take one last question. There's a question from Subodh, which says, can we say that abandoning of gold standard in 1971 was pivotal event that gave rise to VUCA, a situation in currencies?
I think that's a very good point. It was abandoning the gold standard. Prior to that, but that is sort of one event. But the reality is there has been so much evolution of technology, So ultimately, that would probably never have helped, because earlier everything was organized. There were bands between which currencies moved and all. Today the financial world would not live for that. The reason the financial world is so powerful is because, frankly, it has not been regulated adequately and people have made a lot of money. So I don't think that that's going to come back. That's a theoretical point. That was certainly a pivotal historic moment.
Right. So thank you to both Mr. Mecklai as well as Nishant. To all our participants who joined us, I would just like to say that all of you who are not members, to become members of BCCI, because we keep on having sessions like these with experts who tell us as to what's happening around, what are the futures which are going to look like. We on 24th, we have a session on corporate debt management in India, which is a physical session we're having at one of the leading 5-star hotels here. We have the Deputy Governor of RBI, who's our chief guest, and we have speakers like Mr. Nilesh Shah, Mr. Neeraj Gambhir from Axis Bank, Rajiv Sabrawal from Tata Capital, Anjali Bansal, Rajiv Anand from Axis Bank, Abhizar Diwanji from Ernst & Young, Anant Narayan. So all these people are going to talk about the debt market, and very, very important session. If you're a member, you automatically get invited to these sessions. So our website has all the details. You want, you can write to us. PCCI, not only in the financial segment, but all across. We have around 22 odd committees which look after every single aspect of the industry and helps you increase your business. So if you're not a member, become member today. And if you're a member, you know the benefits which are there. So thank you once again to both of you. And I would hand this over back to my colleague Sugita for the vote of thanks. Sugita, over to you.
Thank you, Sandeep sir. Thank you, Jamal sir, and thank you, Nishant. I am indeed privileged to perform the pleasant task of proposing the vote of thanks today. On behalf of the Bombay Chamber of Commerce and Industry, and on my own behalf, I extend my sincere thanks to Jamal Mecklai, our keynote speaker, who is CEO, Mecklai Financial Services Private Limited, and to Mr. Nishant Shah, Managing Partner, Jackstien Practice and Consulting International LLP, for very insightful and thought-provoking discussion. Today we had an opportunity to hear your thoughts, and this will surely be going to guide us to understand where on earth is the rupee going. Thank you. Thank you very much once again. I'd like to extend my heartfelt thanks to Mr. Sandeep Khosla, Director General, Bombay Chamber, and Ashith Kampani, Chair, PEVC Committee, Bombay Chamber, and Chairman, Cosmic Mandala 15 Group, for taking time from their busy schedule and delivering informative introductory remarks and welcome address, which chart our path. At Bombay Chamber, we believe in closely engaging and collaborating with our members. Thank you, Harinagar Sugar Mill and Jackstien Practices and Consulting International LLP, for supporting us to materialize today's discussion. I'd like to thank our invitees for participating in this important webinar today. All activities and attainments of the Bombay Chamber cannot be accomplished without the strong and consistent support of our Chamber Secretariat. I'd like to communicate my thanks to Ms. Priya Singh and Mr. Utkarsh Joshi, Executive Research at Bombay Chamber, for their commitment and jailers non-stop work and make this effort a success. I thank you all once again. Thank you.